I'm Dan Fitzpatrick at Stock Market Mentor and OptionMarketMentor.com on December 17th. By the way, if you're not a member of Option Market Mentor or you haven't tried it out, please do so. Okay, we got some good trades going on over there, and my videos are also focusing on helping people learn how to trade options. That's a process. It's not an event, but I want you to go check that out. And also, while I'm talking about that, I will be teaching an online webinar live streaming me in the studio on options in January. So get over there and at least get on the mailing list, and you'll get more info on that. Okay, earlier today at 11 o'clock Eastern, to be exact, I was talking about Apple and Research in Motion on CNBC with Carl Quintanilla. Boy, that guy's a nice guy. Love him. Huge man crush. Anyway, what we were talking about was the potential head and shoulder pattern on Apple and then also Research in Motion. So I thought I'd just go through that with you. Okay, on Apple, look at today's low, 501. Very, very close to 500 bucks. My neckline here, I'm not talking about my 17-inch neck. I'm talking about connecting this last low with this low here is now being confirmed by this low. This is the left shoulder. This is the head. This is the right shoulder. These three form a head and shoulder pattern only if the neckline here is pierced, and it's got to be pierced on strong volume. So far, that hasn't happened. So I view Apple now at 519. I actually look at that as a buy, not a sell. Now, if Apple ultimately falls below 500, again, on heavy volume, then it rallies back up to, around this point or so. If it starts teetering at all, that's a massive shorting opportunity. Love to see that opportunity. Short it there, ride this thing all the way down to victory. Just a measured move. It's not my price target. It's just a function of math. You take this, which is 190 bucks, the difference between the top and the neckline at that point, extend it back down from where the neckline is broken. We'll say $500, and that gives you $310 as a price target. Now, I'm not saying that Apple's going to go that low if it falls below 500. That's really not the point. The point isn't about me being right. The point here and what I'm trying to do is to help you make money. And so the idea is if Apple falls below 500, look, just stay away. Let the stock do what it's going to do. We could get more selling into the end of the year, or not. Maybe this is the bottom. Maybe this is the bounce. Like I said, I view this bounce right now as a buying opportunity, which would mean that I would want to keep my stop just a little bit below 500. And if you think 20 bucks is a big number, no, move the decimal point over one. And the stock is not at 519, is at 51.90, and we're talking about keeping the stop below 50 bucks. We'll say $49 or so. So it's really not as tight a stop as you might think. But for the time being, again, Apple remains a buy with the stop right here. If it falls below 500, it's a sell. Okay, now Research in Motion. This is really interesting. I look at this like 3 pops and a drop. I think that's something that I just made up. Maybe not, though. Look at the volume here on the initial move higher. Boom, that's your first pop. Then, well, I guess this wasn't really a pop here. We got a nice move, but the volume was eh. Now we got another high volume move right here. Then finally, the last high volume move was just last week up to here. But if you look at the line connecting the volume peaks, it's declining. So what that's telling me is there's waning buying interest. Buying interest is diminishing on these big moves. Now, what does that mean? Well, when you see huge volume, you need to think institutions. You and I in our little Ameritrade accounts don't really move stocks much, not like Research in Motion, not a stock that trades almost 44 million today. That's institutions. So my contention is they've already made their move. Now the stock or the company announces earnings after the market on Thursday. That's 3 more trading days. And my bet is that unless Research in Motion falls before then, my bet is that's going to be a really, really good opportunity to sell the news, because this stock has run up incredibly. 4-month base here, but look at how far it's run. So with all that pent-up buying already taking place, and by the way, after you've bought a stock, what are you? You're a cheerleader, and you're also a potential seller. Those are the only two things you're going to do. You're going to be leading cheers, and you're going to ultimately want to sell the stock. So if they announce like massively strong earnings, what's going to happen? Okay, the stock will pop up, then it's going to drop, because that's what these stocks do. Or the stock's just going to gap down, and who knows what it's going to do. I don't know. All I know is this. I want to be out of the stock from a long side. I want to be out of the stock before the end of the day on Thursday. Frankly, I'm already short this stock. I'm using puts on it. And my position, just so you know, because I mentioned this to Option Market Mentor members earlier today, my position is that if I lose 100% of the money that I'm putting in on puts, I'm okay with that. I mean, it's that small a position, but it's also the type of position that if Research in Motion does what I think it's going to do, then that small put position is going to turn into a really big put position, and I'm going to make a nice profit. So my suggestion is, again, if you're going to short the stock, just know that you could get a big gap up, get squeezed out, and then the stock will fall. So the stock is always, seems like it's always going to go against you if you try to game earnings. But just keep in mind, it's already had a heck of a move. So how much more can it move? How much more can it advance before the stock ultimately just pulls back? So, okay, that's it here. Now, members, get over to the strategy session.